Directly from 42nd Street in Midtown Manhattan, New York, I am your host Harbin and you're watching my channel YOLO, You Only Live Once.
Let's talk about today's topic. What is the right time to file for Social Security benefits? Is it as early as 62 year of age or at 65 or full retirement age of 67 or the maximal delayed age of 70? The answer to this question is not very simple. Every person, every couple who is going to go through the retirement is going to basically have a different set of environment, a situation, and they will have to basically find what is the suitable age for filing for Social Security benefit for their own individual case. But in my view, there are certain things which are common irrespective of what your individual situation is. And I think that is what we need to talk about. First, what is the purpose of Social Security benefit in your retirement life? If it is going to be your main source of income in retirement, then the calculation you need to do is what is the most benefit you can get out of your Social Security benefits. So that means what is the most realizable gain you will get from your Social Security benefits. So now in that situation, the earlier you file, the more number of payments you are going to receive. It has been stated that the break-even point between filing early, filing at the right full age of retirement, or filing delayed at 70 comes between 77 years of age to 81 year of age. So that means if you file early at 62, you will get reduced benefits, but you will still gain more in total amount till you reach this age of 78 or 77 years. After that, you might be better off filing at your full retirement age. But even with full retirement age filing, after 81 or 82 years of age, you will actually start losing money to someone who will file at 70 year of age. So the point I was trying to actually make that if Social Security is your source, is you're going to be your primary source of your retirement income, you might look into these break-even point depending on your health situation and your longevity to basically identify what will be the right age for you to file for these benefits. But if it is not going to be your primary source of income in retirement, so that means you are actually trying to use it as one of multiple income sources, then in that case, the situation is going to be totally different. Now, if you look at your income sources in retirement, you need to identify which of your income sources are inflation protected. Most of the people, when they actually calculate their income sources and look at social security, they don't consider the aspect that social security income is going to be inflation protected. So that means if inflation in future going to become high like it has been in the last year, then you are better off postponing your filing, because the bigger the social security income you will have, the bigger impact it will have during the years when the inflation is high. So, in my view, it's how you consider the role for the social security income in your retirement portfolio. For me, it's going to be very simple in the sense that I treat it as more of an insurance than as a primary source of income. And why I consider it as insurance and not a primary source of income. The, the insurance, when it comes to insurance, is that I have more faith in the government of United States of America than in any other banks, stocks, or any other asset class. People might have different views. Okay, there are a lot of people who believes more in hedging with gold, silver, metals instead of uh, United States government or treasury or US dollar. But in my view, the chances for defaulting by the United States government practically is much lower than gold falling in the next 20 to 30 years. So when it comes to insurance, you actually think about what is the premium you pay for insurance. So now when you basically calculate premium, we have to see that when you retire, between the time you retire and the time you start claiming your social security, that is going to be considered as the premium you will be paying to ensure a bigger paycheck for the rest of your life. So now if you retire at 62, but you defer claiming social security till 70, your premium is going to be 8 years of that reduced payments. But if you are going to live even few years beyond the age of 78, you will be able to claim that premium readily. If you file at the full retirement age of 66 or 67, depending on what your case is, then the premium is going to be only 3 or 4 years of reduced payment, which you will be able to realize in a year or two after, or at 82, starting the age of 81, 82. So if you are basically planning till the age of 90, 95, then it's no brainer that, okay, it makes more sense for you to pay the premium for the insurance of having the higher, bigger paycheck later in the life. Because if you look at, you can spend more in the initial years from your portfolio and then start getting a bigger check after 70. That will actually put less strain on your portfolio going forward. The flip side of that is that, okay, if you are going to spend money from your portfolio for 8 years to pay towards this premium, and if you are going to use your taxable account to pay for that premium, you are good to go. Because that taxable account, if you're going to pay towards this, you won't be paying taxes on it. Since you won't be paying taxes on it, your payment, the premium payment, is going to be just that. But if you're going to actually withdraw from your tax deferred account, so that means if you have to basically take the money out of your 401k or 403bs or any other retirement accounts to pay for this premium, that means the gap between 62 to 70 years, then you have a problem. The problem is that you will be first paying taxes on that withdrawal, and then you have to pay the premium. And also, that means during that 8 years, that growth, the tax-free growth, you will actually lose that too. So overall cost of the premium become very high when you are withdrawing from your tax deferred account to fill the gap that could have been filled by social security payment. So that's why it's not a simple thing, and it depends on person to person based on their individual situation. But still, my feeling is most of the people, when they try to compute what is the right age for them, they don't consider social security payment as insurance. But in my view, that is something you should take into consideration. Like while you were working, you have paid a lot of insurance premium for a term life insurance, hoping you never had to claim that insurance. But in this case, you know that you are paying insurance and you want to collect the benefit of that in payment from the year you turn 70. So it's actually better than paying for life insurance during your working life. But if you don't see it that way, you will consider that, okay, the last payment of your social security benefits is something which might basically a burden to you. While if you think of this as an insurance, and you will see that, okay, it's not a burden to you, it is actually a very objectively sound principle that you defer the payment or defer the filing of social security benefits to ensure that later in your life you have a bigger payment as an insurance. Another point you need should consider that if you are the higher earner among the two of you with respect to your spouse, then also it makes more sense for you to defer the payment because you both will get the benefit of that deferred payment, a large paycheck, because the survived person, okay, if you survived, then you will be taking the larger check. But in case your spouse survived past you, the spouse will also be able to take the larger payment. So that's why it's a very good insurance in the long run. Now, if you look at the payments, how the payments changes, whether you claim it at 62 or at 70. For most people going forward, the full retirement age is going to be 67 year of age. So if you are going to get on the low side of Social Security benefit, consider that to be 1000 at 67, you actually lose 30% of the payment if you claim it at 62, which is going to be $700. While if you wait till the age of 70, you get 124% of your full retirement benefits at 67, and that will be 1240. So it's almost double your payment at 62. And if you consider it as a insurance and an inflation protected asset, then look, if you are at the high end of Social Security benefit, the difference between the payment at 62, which is $2,300, compared to a payment of 4,000 at 70. And if inflation is high, the difference is going to grow bigger and bigger. So looking at that, the best way to compute the right age for filing the Social Security benefit is to look at your own retirement budget. Please check my another video how to create retirement budget, because once you have created your retirement budget and you know how to fund your expenses in retirement, you can incorporate what is the right time for you to claim the Social Security benefits. But if you can postpone the claim, then you will be secured with respect to your age, independent of how long you live. So consider it as an insurance instead of a primary source of income. So now the question most people ask that if I actually take early distribution of my social security benefit, can't I just put that money in a growth stock portfolio and then benefit from that over the 8 years and long-term growth, then basically deferring it till 70 and then get the higher check. See, the answer to that question is the principle of considering social security benefit as insurance or not. Because whatever might be your growth strategy during that 8 years of additional payments you will be getting, there is no surety that you will be able to grow your capital or principal during that 8 years that will be substantial and will surpass your advantageous bigger check over the longer years. Because we have one unknown which we have to deal with. If we don't have that unknown, it is very easy to compute when to take the social security benefit. And that one unknown is how long you or your spouse is going to live. If you are certain that you are not going to live long enough, then all bets are off, okay? Because then it is no brainer for you to actually file for these benefits as soon as you retire. But if you're not sure and all your life, working life, you have been saving for the retirement because you don't know how long you are going to live in the retirement, then it's no brainer that you should delay your social security benefit as long as possible because that's one insurance you'll be able to count on, that is it, inflation protected, and you will always be able to get it no matter how long you actually end up living. And that insurance is the key thing in deciding when you would like to file for your social security benefit. If you think that is not a true assessment and you have a differing view, please leave a comment so that I can follow up and create another video about this. But I think I would advise people to basically look at social security benefit as an insurance than as a primary source of income. Once again, if you like my videos, please subscribe to my channel and leave a comment, like this video, and have a great day.